It has never, ever been easier to get into the financial markets. I mean, it's all right there at our fingertips. But, with all that access comes a really big question for anyone who's looking to grow their money.
And that choice, well, it really boils down to this. Are you trying to get rich quick, or are you trying to build wealth slowly? And look, these aren't just different strategies. We're talking about completely different mindsets, each with its own set of rules, its own risks, and of course, its own rewards.
So the doors to both trading and investing are wide open for pretty much everyone now. But before you just jump in, you really need to know which path you're about to walk down. So today, that's what we're going to do. We're going to break down the two big approaches: the high speed, all out sprint of day trading versus the slow and steady marathon of long term investing. All right, first up, let's talk about the one that gets all the buzz, right? The exciting, super fast paced world of the day trader. So, what is day trading really? At its core, it's exactly what it sounds like. You're buying and selling stuff: stocks, crypto, you name it, all within the same day. The whole point isn't to own a piece of a company you believe in. It's to skim a profit off those tiny little price changes that happen minute by minute, or even second by second. The world of a day trader is really defined by a few key things. First off, everything is incredibly short term. You never, ever hold a position overnight. Second, you're actually looking for volatility. I mean, you want those big price swings because that's where the opportunity is. And finally, and this is a big one, this is not a passive hobby. It takes your full attention and demands super quick, confident decisions all day long. And you can totally see the appeal, right? I mean, there's the promise of instant returns, making money today, not years from now. Plus, by closing out everything at the end of the day, you avoid that risk of some bad news coming out overnight and crushing your stocks. And for a lot of people, it's just the thrill of being in the game, making moves, and even being able to make money when the market is going down.
Now, to turn those tiny daily gains into something substantial, traders often use a really powerful tool called leverage. Basically, it's like trading with borrowed money. It lets you control a huge position with just a small amount of your own cash. This can absolutely supercharge your profits, but, and you knew there was a but coming, it also supercharges your losses just as fast. It is a classic double-edged sword where the stakes are unbelievably high.
Okay, so let's hit the brakes and shift gears into a completely different way of thinking. If day trading is that frantic sprint, then long-term investing, well, that's the marathon. Long-term investing is that classic buy and hold strategy you hear about. You're not glued to minute-by-minute price charts. No, instead, you're buying a piece of a company or an asset that you believe has real fundamental value. And the whole plan is to just hold on to it for years, maybe even decades, and just let it grow. Here, the rules of the game are totally different. Patience is your single greatest asset. Your decisions are all based on a company's long-term health, its potential, not on the daily market noise. So those short-term dips, they're not a reason to panic. They're just bumps in the road on a much longer journey. It's a lot less hands-on. And the advantages here? Well, they're all about steady, less stressful ways to build wealth. You get to harness the incredible power of compounding, where your earnings actually start making their own earnings. Seriously, think of it like a small snowball rolling down a hill, just getting bigger and faster over time. It's way less stressful, you pay fewer fees because you're not trading all the time, and in a lot of places you get a tax break for holding an investment for more than a year. Like one Reddit investor perfectly put it, this is the ultimate get-rich-slow scheme. It's not about that instant win, it's about patiently building wealth in a way that has consistently worked for millions of people. So, if we know this path works, why is that get-rich-quick idea of day trading still so powerful? Well, let's talk about the reality of it. We've seen the exciting promise of day trading, the allure of it. But what does the data, and more importantly, the experience of most people who actually try it, what does it all show? This is a pretty stark quote from someone deep in the Reddit investing community, but you know what? It's not just one person's opinion. It actually reflects what tons of academic studies have found again and again and again. 99%. Just let that sink in for a moment. And this isn't just about being unlucky. As an individual, you're competing against super fast institutional algorithms, high-frequency trading firms, not to mention crippling fees. The odds are just they're massively stacked against you right from the start. And this personal story, it just perfectly captures the psychological trap of it all. That one good day, even if it's just pure dumb luck, can give you this powerful emotional high. It can get you hooked. But trading on emotion instead of logic, that is a recipe for disaster, as this person found out the very next day. So here it is, the fundamental difference, laid bare. All the evidence, from research to real-world stories, points to one path being a gamble that almost never pays off, while the other is a proven, if kinda slow, way to build real wealth. There's no better way to sum all of this up than with this classic quote from Warren Buffett. He was spot on. The stock market really is a device for transferring money from the impatient to the patient. So, okay, after that pretty sobering reality check, how do you decide what's right for you? The goal here isn't to say one is always better than the other, but to help you figure out which one actually fits you. Before you even think about making a choice, you've got to ask yourself some really honest questions. What's your actual goal here? How much risk can you really handle without losing sleep at night? And be honest, how much time can you realistically dedicate to this every single day? This table lays it all out, side by side. You've got day trading, it happens within a day, it's super high risk, you're focused on technical charts, it's incredibly stressful, and it's basically a full-time job. Then you've got long-term investing, your timeline is years, the risk is more moderate, you're focused on a company's actual value, it's low stress, and you just need to check in on it from time to time. I mean, the trade-offs couldn't be clearer. And ultimately, it all just comes down to this one question. Is the thrill of the chase really worth the very, very real risk of the fall? Are you here to gamble? Or are you here to build? Only you can answer that question before you start your journey in the markets.
Don't forget to subscribe to the channel, like the video, and click on the bell icon to turn on notifications.